Hello, hello. How's it going, guys? Can I give it a few minutes for people to join? 5 minutes or so. Oh, what's up, man? You're joining me. I'm gonna lower my music. Yeah, yeah, you can talk to me. Oh, oh, all good, man. All good. That's cool. That's cool. I appreciate it. I appreciate it. Yeah, I'm just gonna give it a like. Usually, I give it 5 minutes for people to join, and uh, people sometimes they take their time, but yeah, I'm just gonna talk a little bit about the charts that we have on our faces. Why should we? The theme of the day: why should I be short? Why should I be long? And we have actually reasons to be both. Uh, and if we take this level by level, then we can scout for the opportunity. So I think the best approach will be finding the best risk reward if I thinking this is gonna flip to the downside, and knowing when the downside is completely out the window, like there's no reason to be bearish anymore, so I can flip completely bullish and look for the best opportunities to the upside. Like even though we missed the bottom, I mean there's stuff that is gonna start continue going higher if this is basically a higher low in the weekly time frame, right? So we just gotta take a look at this. Thank you for joining me. Oh, I'm not sharing my screen over here. I thought it was. I'm sorry. Thought it was. I'm sorry, guys. Here it is. I'm also live on YouTube for people that have the link. It's right there on my Twitter, and I'm gonna try to be active a little more on social media and whatnot. Right. Usually keep the stuff to myself, but I don't know. I've been getting people have been telling me, that the I've been getting into the idea that sharing is caring, right? Like I actually feel good whenever people are. I know, right? I actually feel good that some people, whenever, because I make some killer watch lists and whatnot, but I'm not able to trade everything. In fact, I try to keep my day trades to be between 2 to 3 stocks, but sometimes my watch list is between 8 to 10 stocks, and watch list ends up hitting 75 or 80% of it. So I mean, it's good about sharing, and actually this originally this session on Wednesday was on Thursdays. Night was to look for those lot of Friday opportunities. Now I do it on Wednesdays. I may do like a quick session on Thursdays from now on. I'll see. I try to change the schedules because the to fit in with my personal life as well, right? But we
I like Wednesday. It's like midweek check in, you know, like maybe get a couple days.
Yeah, yeah.
But
It's always
we got
good to look at the market before the week starts, so you can have a sense of the weekly candles, and then and then in the middle of the week you're kind of assess, um, where are we heading for the rest of the week, or what are the opportunities out there. And then if you're the kind of guy that likes to look for a lot of opportunities, options, calls, or puts that are out of the money that can end up in the money, that's the real deal, right? That's where your homework comes in very, very handy, and you can hit those multiples, 100 to 200% gainers. Um, so yeah, I have a few setups, but like I said,
Wait,
this.
can you do some too? Or like, I think I have. Well, the setups. Okay.
Yeah. Basically, at the end of just going for a broad analysis, I like people to throw in some tickers. You know what they if they see something. No, just don't throw me a ticker that you already have a position on that somebody alerted and you want to know if you're right or wrong. You know, no, just throw me if you see something. You know, throw me something out there that maybe we can throw the trade into the next day. You know, we have had some great ideas before. Some people got thrown some trades. You know, and I used to be very rude. I used to tell them like, send me your chart so I can tell you if it's trash or if it's good. But no, I mean, but I'm just gonna. I mean, I'll be straight honest. You know, if I see a trade or if I see a counter trade, I'll let you know. You know, it's just the nature of it. But I could totally be wrong. I'm being wrong in many times. But I mean, I
Yeah.
do have a good track record. So I'll start with that.
Yeah. I'm driving, so I'll have to like pop in on audio because I can't really type.
That's
And
cool.
every
That's
time
cool.
I try to do that when you're streaming, it's like my Discord freezes on my phone.
That's cool. I mean, just put it in autopilot. Don't you drive a Tesla like everybody,
But
like every other trader?
no, today, no man, I have a CTSV and today and a little SUV crossover, and today I'm driving a freaking Camaro. So it's like the bumpiest car. And I don't know. The V has too many miles. I don't want to drive it anymore. I just want to sell it. And this thing, I hate the suspension on this thing. So bumpy.
It depends on the
Uh,
roads, right? If you're driving highway, I'm pretty
yeah.
sure it's nice, but I don't know. I don't know. You're in Texas, and I don't know if some.
I'm in San Jose, California.
Oh, you're in California. I thought you were in Texas.
No man, Willow Glen, San Jose, California,
Oh,
Silicon Valley, the heart.
uh,
I only have one ticket. I haven't charted, but I was just trying to figure. I had an alert, but it was Square. I haven't sent anything. I haven't really looked at the charts, but if you get a chance at
well,
the end,
yeah, we'll look at
uh,
tickers at the end. We'll look at the subs at the end, and like I said, for people that are just joining in, prepare some tickers. Well, we'll do this little quick session of the indices, and then we'll look at them at the end, and we'll call this section. You know, we'll find a name. We're gonna call it trash or
oh, like the traded or faded.
yeah, trade. Is this the trade of the century or is this trash? No, something catchy, you know, like this whole section is called charts and chat, but then the last section will be
Oh,
called is this trash or there has to be something that rhymes
cash,
rhymes with it.
cash,
Trash or cash?
trash or cash. Yeah.
Yeah, I love it. I love it. Thank you. That's a good idea. Oh, so maybe we're gonna call it like that. So all right, let's get started. So we have I have in front of the screens SPX. So I want to start with that and not futures because I mean it's sometimes I'll swear that the overnight levels they do offer um, some good TA, you know, but there's a lot of times whenever you just get rid of them and focus only on the cash session, you're gonna get what the true market is doing, you know. So right off the bat, we have the year-to-date lows on SPX at 34.9158, and we have the top around 4100, right? The last swing high. It kind of double top and actually on a bearish divergence on our side. But given that, I mean, there was basically mostly news driven, right? Because we actually gap higher, we covered the gap on the whole day and whatnot. You know the story. I'm not gonna go back to it. But it's good to identify why did we bounce or why should I have stopped shorting right here? And this is where I started going long into this area because of the uh, it's just the levels, right? It's just technical wise. I mean, I know it's the market is looks super bearish. I know that going long into the red candles does not seem like the best idea because it's how far can it drop, right? The sky is falling at that time, and at that point, I just thought it was a good risk reward from that perspective, right? 50% retracement from the lows, last swing low to a last swing high, and it just made sense to me. Other than that, there was a clear indication that there was some poor structure on the CPI where we make a gap and run, and it just gave us a good repair of the structure on the past right here where we left this gap. The below this, there's really no gaps to be filled on the on the market. It's already, you look at the other.
I think SPY has one like way down there. SPY. It's like 257 or something.
Way below, maybe possibly,
It's
right?
way down there. It's wild.
Basically,
Mentioned that today, I was like, holy crap! I totally forgot about that, but it's there.
there's actually some statistics that most of the gaps get filled within, I mean, the first 2 to 3 days, and then the next gaps are filled into the next 1 or 2 months, and then
Yeah,
some,
that's a January gap. We'll revisit that January.
and there's some gaps that are just never filled, right? And that the
Yeah.
market leaves like that. And as of now, like in the nearest structure that we have pour is actually, we do have a gap above us around SPX 3959 and 3966. It's a very small gap, but it's just poor structure that we have left in the past. And between this point and 3500, there's really no gap, right? Maybe something into 2500s, right? That like Prophet mentions. Just on the near time frame, that's what we have. So we do have a reason to be bullish on this because of this 50% retracement. Like I said, it's a very technical bounce. It's basically a way of saying, the way I look at it, the way I represent the 50% retracement is that the market has made this whole run to the upside and you kind of missed it, right? Somebody missed it. This is basically, you're finding a deal buying that 50% retracement because now the prices are half off of what you just missed, right? And you can enjoy some of the upside at that point. So very technical bounce and everything, right? Now we're just gonna look at the NDX and kind of do the same thing. So from this perspective, we're gonna see from the lows to the highs right here, and we're gonna see that the market did poke below the I'm sorry, the 618, but it's the same idea. Basically, a trend line bounce into a 618 retracement and repair of structure on the NDX, which is the Qs. This is the QQs index, just like SPX is to SPY. So we did repair the structure. There's no gap below it. There are no more gap below it between here and the last swing low, and that's what we have right now. So the market was due for a small bounce, and this was the best place the market to have done it. The best risk reward, and now it's because statistically, I mean, the market doesn't have like 6 red days in a row, so it was just very technical bounce. Now, is this a dead cat bounce or is this a return to the upside? That's the question, right? And I'm not here to give you an answer. I'm here to give you levels to what you consider at that point where something is it's out of the waters for the bear side, and it can continue to go higher, right? Everybody's coming for loom and gloom into the downside, and I understand it. The conditions are set up for that. But let's try to be objective into this, right? So we have this bounce on SPX, so we're gonna take now a favorite retracement from what it did at the highs now, but now on the other way, right? From the highs into this low that we just placed right here. So that's basically why the longs that I'm targeting right now. Basically, what I think of this move that just happened, if the market is gonna place a lower high, it's gonna do it coming into one of those areas, which is the 32 retracement. I don't really think it's a good risk reward right here to start shorting right here, or the 50%. Maybe the 50% is a good short, or even the 618 is a good short, right? Because it's best risk reward, right? If the market's gonna turn around from here, it's gonna do it on a very good level for you to enjoy a lot of the downside. So here are the levels, right? 50% is around 39.49, 39.49, and 618 is around 39.85, 50. So, or I also use the 6.5 right here, just sometimes that it pokes a little bit above it. If it does reach let's say if it doesn't really make it fast, right? If it reaches the 618, along with the trend line that we have at the highs that we just poke out of, and kind of like a false breakout, the year to date trend line that we have right here, basically, that you'll have like confluence right here to short the market, at this area. That would be my best area to short, right? If it will make it something like that. But I don't dispute the opportunity to short at the 50% retracement, because it makes a lot of sense to come back over here and then drop. I think on the weekly, yeah. The weekly 20 EMA was support and rejection for a few weeks before. So as we come higher, we're going to hit this right here. So we're going to have to keep that in mind. We have to keep that in mind. The weekly 20 was a good buying opportunity on many of the weeks before. It might be, now that we're below it, a good short opportunity. So I'll keep that in mind, that not only the tracements are as overhead resistances, but also the weekly 20 EMA. And some people use the 21, but that's what we have. Um, what else? What else? So well, I guess going back to the very beginning, reason to be bullish is that 50% retracement bounce. It's basically, you will make a bull flag, right? And your targets will be like another 50% jump off of that. Your targets will be actually going to SPX. I mean, for starters, 4100, and then 4160, and then 4400, right? But I mean, this is just going. If the weekly time frame is just gonna do something, I guess, like I said, a bounce, a run up, drop into a 50, and then a run up higher, right? If that's what the market is poised to do. Let's see, but level by level, I think I will consider that possibility once you're clear. Like I said, this SPX 3980, 3993, the 6.5, and the trend line, of course. After that, like, I think the sky's the limit. Obviously, as you, if the market is really going to go for it, right, to like a Santa rally or whatever, right? Remember that there was a tax harvest loss, period, that people are selling their losers right now, for the next year, and as the year ends, that's not a problem anymore, and selling pressure can dwindle down a little bit, and we can have some of that upside. So we'll see. I mean, that's just all technical speaking. I don't know what's gonna happen if Bank of Japan starts being very aggressive with the trying to control the yield curve and whatnot, right? So that's that. There's that, and I think I'm gonna let me see the QQQ real quick. I think I wanted to show you guys something else too. So we don't look at the Dow that much, right? Because the Dow is not that sexy. It's not the clear indication of the market. But I found something very interesting, which is and excuse my mess of lines right here. Excuse them, but focus on something real quick. I have the Dow right here, and we had a clear trend line break to the upside on the Dow. This is on the weekly time frame. We had this. I think we analyzed this on some charts in chat before, and we had a breakout of it. Like, obviously, it didn't matter that much because the SPY has yet to do it, right? And it kind of did it with some economic data that came in. I think it was on the Fed day, but for the most part, right now, it was a false break, right? The Q's had a false break of the trend line and whatnot, but the Dow, it is making something very technical, which is trend line break now retest. This weekly low is basically a retest of the trend line break, and also it's a touch of the weekly 20 EMA and the 50 EMA. Mostly, I mean, to the penny, the weekly 20 EMA Dow futures on YM, right? So that's very, very important, right? And if you notice, like, the sizable upside that we had today, how was the Dow Jones up to how much today was? It was up.
There's a lot diamonds.
Yeah,
Diamonds.
160%. Once 1.60% up on the day. I don't know if it was higher than the spies. Let me check real quick. It was it was a lot. Yeah, a little more gains than SPY. SPY was up today 1.50%. So a little more upside right now. But staying objective with it, if we look at the future session high to the last swing high to the last swing low, even though it was a trendline break, let's stay objective, right? So the highs of today are the 32 retracement to the penny, in fact, as seen on the chart right here. And we're also gonna hit the daily 20 EMA around 33,720, around roughly like that. If not, I think the 20 EMA right now is 33,699. So roughly there, right? So it's gonna hit that, but the 50% retracement is coming into this right now. So the reasons to be, I think this chart is more bullish than anything else. I think that the whole reason of doing a weekly trendline break and retest into going higher is it was very bullish. Even though this leg down has to prove itself out of it, so the Dow will have to trade off of above 34,400 to actually YM. I'm sorry, Dow futures. So we can consider this not being a lower high. You know, that has a possibility to reaching that and start breaking new highs. Now there's some stocks, you know, there's only 30 stocks on the Dow that had some very bullish setups, and my friend Profit right here is still long GE, I believe, and that one had a fantastic day today, and I was
2 days, massive.
yeah, it
And
had
we just added too. I
it,
think I sent in the servers, but it was like just added at like that 70, just around 77 off that 200 week. But what a wild! I felt bad too because like I couldn't really send it fast enough. I grabbed GE January 20th $90 calls at 16 cents. I unfortunately trimmed them, and I'm so upset.
it,
Like they hit $60 a day. I'm like, this thing's going higher.
it makes sense, right? It makes sense, and
Yeah,
and
I grabbed 85 calls for January 2. That's yeah, it's going higher.
it's
But
coming up to a
the
trend
one I
line.
haven't.
Yeah, it's coming up to a trend line, and I think it still has more room to the upside. It may cool down because of the trend line at some point. Um,
Look at those candles though.
but it's some
Goodness.
crazy moves. It's some crazy moves, and this is
I
part of
mean,
the
for
Dow, right?
GE,
If I'm
yeah, for
correct me if I'm
GE, a company with that big a market cap to make like what is that, like 8% in 2-3 days? Like that's pretty heavy. I am looking at Boeing. I haven't really charted it yet, so I don't know if that's on your list.
I believe it's in the Dow. I'm not sure if it's in the Dow or not. Maybe I'm wrong. Uh,
The Boeing, BA.
Boeing, yeah, Boeing is in the Dow for sure, and and this is because I was looking at industrials as well, right? The Dow has plenty of industrials, and if you look at Boeing, this one had a very massive day today, and I'm sad to say I missed it. This is basically a I mean, you can see it on the monthly that is making some very big time breakouts, breaking the monthly 20 EMA and everything. I mean, this could have a very good month next month. And this is just doing great right now. This is doing great, and you can see the strength on XLI, which is like General Electric and Boeing and all that. It's gonna be on industrials right now, and it's some of the top performance of the sector. So I'm keeping a very close eye on this. If you guys look at Caterpillar, for in fact they made a new 52-week high, and if you look at the monthly on this thing, it's very close to making a new all-time high. And I have some key levels right here, coming down from the weekly, I believe, and I'll be looking to that. I mean, Caterpillar, I think it has a room. I think if you notice on the daily, it has this huge consolidation area, and this is probably like day one. If it's not gonna be a false breaker, right? Because if it starts coming down into this range again, I will say that that's super bearish. That's basically a Wyckoff distribution max peak right here, and then into if it starts coming down into it, this is a straight up shorter. You know, it's not even gonna hold this range. It's probably gonna dip and start rolling down
Yeah,
super hard. But if
it
it's
did that last time.
yeah, this
There's
space. What's up?
Oh yeah, I did that last time. I think if you zoom out, you'll probably see it. But it's like it tried to do it twice, and then it was like this epic failure.
Yeah.
Same level too.
So it already broke out, I believe, from the balance area, and this is if this is not a false breakout, which is less volume than other candles, but I mean it's average volume. I think I mean this has room towards those levels on the weekly time frame, right? The 245, and then you have the 246 levels to come to go to, right? So a few dollars to go there, and that would be a new all-time highs for Caterpillar to go for right there. So and if you look at the weekly, I mean this is a classic breakout of the area. Now my only concern is that the I use expected move a lot on stuff like this. So Caterpillar, it's way above the expected move right now. If you guys look at this real quick, this is basically this green line is the expected move for the week, and the red line is the expected move for the week to the downside, to the upside right here. So this is already out of it, right? So options did not price in this high, but a lot of the times whenever you break out of it and hold, we're gonna take a line, make a line from the weekly high to to the expected move to the upside and extrapolate it to the top side, and that will give us our basically a 2 standard deviation move out of it and hit a little bit about 245. So if Caterpillar is gonna go for a 2 standard deviation move for the to end the week, it's gonna end up around 245. So that's a good trade setup for the next days, and something that I'm looking for. Like if the Dow Jones is basically doing a trendline break and retest, the names on the Dow Jones are just gonna go right. Are gonna go, and it's just gonna go straight higher. And the whole idea of the new economy versus the old economy, is gonna start. It's gonna play out again like it did there was a divergence between the Dow going higher and the SPX SPY not going that much, right? So
10-year rotation, baby. Here we
yeah,
go.
yeah. So we
Hey,
still
can
having
you
those.
look at? You just made me think of what I have not
What
looked at
is
in a
it?
while. CRM. It's in the Dow, but it's also tech. And I haven't looked at that chart in forever.
So this one right here, like everything else, is having a relief bounce. The weekly does not tell me much. The RSI on the daily doesn't tell me much. It's basically flat from those two lows. So basically, there's no divergence to the bull side, and there's no indication that this could be a bottom right here. It plays a new 52-week low today, in fact, but at the like I said, RSI does not indicate anything. On the weekly, there's no indication of a little, no, not really indication of anything right here. So for this to change, I think for me to be able to call the Dow, I mean not the Dow, CRM out of the woods, and that could potentially have some upside, it will have to trade above this 140 level, right? And there's ways from it, right? If you think it's gonna hit 140 level, I mean, of course you would like to be long from here, right? We just at the moment, I really don't see the a clear indication, right? Like there's sometimes that you'll see a setup like this, and you'll see RSI way higher on the new low, right? That it just made, like a way higher, and then you'll be like, okay, this is coming in with more green candle closes. If you guys don't know how RSI works, it's basically a math equation considering that if it has a higher close from the previous candle close. So in
Is that
reality,
the same reading on that recent low on RSI, or is that divergent there?
there's no divergence. It's basically the same
Like
reading.
if today was the 52-week low, is today's RSI reading lower than
Is
that prior low?
It is not lower. It is not lower. You would say like it's the same. So some people, like, I actually don't put connotation on this because some people will call this like a hidden divergence. It's a hidden divergence.
That's what I'm talking about.
Yeah. So I don't use this a lot because they are very misleading in my experience, right? In my experience, they're a little bit misleading. Hidden divergences are hard to pull off than other divergences where they're very clear. They're straight to the point. They're right there. So So
Yeah, that's
I'll
like the only thing. I did like a bull put spread on Ford today. So like, cause it's there, it's in the Dow, it's in the diamonds. Had a nice bounce today, right off a pretty key level. Um, so like I went long, but I went long in a different way by selling puts, right?
no,
Because I don't know. To your point, I don't know if it's gonna make a huge breakout. Um, and that's definitely divergence. But
right as of right now, this is pointing a weekly divergence right now. So there's that to that, and the daily on four has a two down 12 strike reversal. Making that next candle high at 1217 at least for target into this. And if this is gonna be a relief bounce to maybe a lower high, you can at least take into account that the 50% percent retracement is until 1252. So that I think is good to the upside as of this moment.
let's go.
I don't know how far your put spread is, but
Nah, it's a short, but it's actually
no, yeah,
January month.
January. So hopefully you get some premium out of it. At least if it makes it to those areas, you hopefully
Yeah, no,
kill some other premium
it's
on the put
tight.
side.
I actually got like 50% premium, 40% premium. But yeah, I was thinking maybe if you saw something on CRM, I could probably do something similar. But yeah, I'm not sure.
CRM doesn't
How
have
it
it
would be.
more clearly. It's
Yeah,
just
it does.
the issue like we see stuff like Amazon or Google stuff like that. It's just there's no indication yet that they are done. Coming down. That like it's different. Sometimes you'll see clear indication on some names, but these ones are just not really don't look done yet, or at least until they
Yeah,
break some levels. But as for divergences at the lows or anything like that, they don't have it. I've been looking around and they just don't have it, and I'm curious, right? Because I mean, Apple is a big part of the Dow, and Microsoft
yeah,
is a big part of the Dow, and they're just not names that are.
that's
I mean,
true. Yeah,
Microsoft is not
very
doing
true.
that bad, but they're just not doing great, right? And one of the I guess if you're into fundamentals, there was a recessionary period, I think in 2008, where the only green stock was McDonald's on the year or something like that. I don't know. There was some data that I saw like that, because it just points at a recession. Like this is what people buy in recessions, right? But it might be a little bit different, right? We don't have a dollar menu anymore, and it's just I don't know. People don't eat that crap that
Is that what
much
happened?
anymore.
I was looking for that thing the other day.
Something like that. I'm gonna look for I saw it in a tweet, right, that McDonald's was like the only green thing on some recessionary period or something like that. So um, going back to a little bit back to what we talk about, if Caterpillar is gonna go, and we have some industrials. I have a setup right here, which is Honeywell. Honeywell, if you look at it, it closed right at the 6.5 or the 618 retracement on the daily. So it's basically at the point of turnaround if it's gonna make a lower high to come back down, right, and to start coming down. So it's a short setup if you have the conviction that this is gonna come down. Now, but given that I do think that industrials are going higher, that the Dow is going higher, that Honeywell is in the Dow, that XLI looking like it wants to jump higher, I think it can clear this retracement and actually go for the at least that trend line at the highs or that 220, right? So Honeywell is one of the setups that I look for the next couple of days for candle highs, right? So as you guys know, I have sometimes my opening bell trades, and if the market, let's say, it opens flat, or Honeywell if Honeywell opens about the prior day's highs, I think it's a go. And we'll see if we can get some gains out of there. So that's one of the setups that I have. Let's you asked me about Chop, right? Shopify, no, you asked me about Square, right? Was it Chop or Square? I
Eight
forgot.
Square, yeah, SQ.
Square. So Square being one of those tech companies that I don't like at the moment, I think at this moment, let me see. Let me look at this chart real quick. Look for anything in particular. Okay. Okay. Okay, so if a Square manages to be green, let's say like there's the daily 20 is coming up, and it has been rejection in the past on some candles, right? Not all the time. It actually dances around that too much that I don't want to put that much confluence into it, right? If I see a stock that is directly just, you know, rejecting the same EMA at the all the time, and then I think it's right to think that they may reject another time, right? So, but this one, it does reject sometimes, and but a lot of times it just dances around it, so it's not clear indication. But it's coming up into that. It's soon to be there in $1, I think, higher than this, $2 higher than this, and the 50% retracement is 65.58. So it's clearly on what I would call a channel, I guess, a volatility box, or it's just a trading range that it has. I don't see major upside into it. I do think that it can reach the 50% retracement, maybe for a lower high, and then drop. So if I was long into this, I would probably, because there's no divergence on our side from the lows. If you notice that from every low, it actually went lower. I,
I would not be long. I was looking for a short. So what was the short? The 65 what?
the 65, 68 level. It's
Yeah.
one 65, 68 level, and the I have a level on the weekly that looks pretty clear to me. I'm actually gonna paint it a little bit. Let's go down to the daily. The 65.16 cents was a level on the weekly, so it may even go back down before it even hits the 50% retracement. Yeah, it's if I was long into it, I would be like one foot out into those levels. And if I was looking for a good short opportunity, I would probably do it around the 65 handle, 65.16 cents. I think so. It's really the best. I think the best approach is to not really trade it with the given that it's inside that range, right? It's just hard. Like it's just established this range for. Let me look at the weekly. I like to say that it's 1, 2, 3, 4, 5, 6. This will be the 7th week on the same range, and it's just too much, right? Like obviously, I think it's gonna have a once you come out of that range, you basically gonna have a large move out of it, right? Volatility is gonna increase out of it, either upside or downside. But at the moment, it's in the middle, basically. All right. So it's time for me to pay attention to chat. If you are here, um, I don't see anything on it. There's no participation today. But if you,
Vito, where are yours? What are yours?
what are my setups?
Yeah.
Oh, Caterpillar and Honeywell are two of them, and then Honeywell, Caterpillar, uh, boy.
Honeywell trigger what? Trigger just green at the open.
If
So
I
what's
mean, if Honeywell opens about the prior highs, with no gap, like right at the highs, it's for me like I'm gonna be grind calls at the open. I think,
what target?
and for Honeywell, I'll be looking at the. Let me see. I do have a couple of levels, but I will have to chart it a little bit. I'll be looking at first target to 1734, and then a trend line, which will be coming up if it does tomorrow hit the trend line. It'll be coming up at around 219. So some upside to go for, because if you look at the option chain, I mean, I'm a DJ and I play weeklies. If you look at the option chain, the 217 calls, because none of the other ones have any, don't even have a bid. The 220s don't even have a bid, and I believe the two get looking for 220 on Honeywell is kind of crazy, so I wouldn't buy it. But the 217 calls are not crazy because I mean an average candle on Honeywell that is basically this range. So if you imagine that you can open at the highs, you can actually hit the trend line and hit 219 by tomorrow. If it does an average daily candle that just sets the low at the prior day's highs and goes from there. That's the whole idea. So if you open below it, basically you can still have a bullish day, but the range has been contracted to the average range of the Honeywell to be less. I mean, not it's gonna be the same, but you're gonna be at a lower starting point. So that will put your options in a little bit of more risk. That you're not gonna be able to put them in the money. But that's the whole idea. I think it's doable. I don't know. I hope you like the trade. I'm gonna place it tomorrow. That call right now at the close is at 30 cents. So hopefully I can, if there's a little bit of decay until the next day, I can buy it for, I don't know, 25 or 20 cents and then get that thing in the money by $1 or so. So we'll see, right? It's just a setup that I have right now. I like it. Me like it. All right. I'm thinking about some of the energy names that to have a little bit of upside. Sorry guys. There's just a little bit of noise right now.
Energy to the upside. CVX, XOM.
So in XLE, I think there's a little bit of upside. I think it's upside in oil futures. So I actually try to look for those long opportunities on oil futures because, or are you if you want to imitate some of the upside on oil futures, you can use. Don't choose XLE because there can be a difference between what oil does and what the energy sector does. Obviously, it gets helped out of it, but there's better tradable products like USO. The USO is just an ETF that holds oil futures. Uh, so it's so you got that going on, and then inside the energy sector, we do see a little bit of difference between some names, which I think, like, if you look at, let's say, the CVX chart, you'll notice that it barely cleared the 20 MA on the daily. It's coming out of a range box at the lows. It did not close very bullish, but if you look at, let's say, XOM, it has a this is what makes me feel more bullish on XOM than CVX. That today's low is the daily 20 MA to the penny. When that happens, it's basically that the buyers are set to push this higher, a very key area, very key EMA, a very key level. And I still think that the range of the box that is in is still close below it. So the cautionary tale will be like, okay, above this high right here, which is 108.51, XOM can see some upside into the 110.70s or so.
Oh my goodness.
So
Cube, you got me on one. Okay, you ready?
what is it?
Oxy. It's a day trader. Exxon is a good day trader. Oxy is a great day trader.
So Oxy, what I like about Oxy, let's say that it has not cleared the EMAs like the other ones, but then if it hasn't done it,
Oxy is on the 200 day. If it breaks that, we go.
So I think like if like the other ones have reached. The other ones have reached their 20 MA. This one hasn't, so it has that room to go, right? So it has that room to go.
It's on the 200 day.
So
like if it breaks above the 200 day at 60, it's freaking on at 63.98. Like a penny higher, it's like it should be a rocket ship.
I see it. I see that there was a clear rejection before break, and now the top of today is basically that, right? So yeah, and I have a very big weekly level, which is not coming down recently. I think I have this level for a while now. It's 65.66, and that could be like target. That Oxy has some very good candles to the upside whenever, like the range of the an average Oxy candle is basically gives you like if it opens above prior day's high and it holds that as a low, same idea. You'll be looking at a 65, 66 target. But the idea is that where it opens tomorrow, right? And what the low of the day is going to be. Then you're going to be looking at, like I said, 65, 66. If you're a weekly degenerate like I am, I'll be looking to play like the 65 calls because I could get them $1 in the money. You know, no, I mean not $1, but like around 60 cents in the money. So
I love it. I did not see this.
I think I like it. We like it. I think as the fifth perspective goes, I will be wary of fifth retracement. That the 618 is basically this. Actually, I have a level right here, 6421. So you'll have to watch out for that 6420. That level gets clear to the upside. When you join, the 200 is SMA daily break. That will be the next level, and if that level clears, then I'll happily hold it all the way to 65, and then if that breaks, I'll happily hold it to 65, 66.
Yeah, I'm thinking like, man,
So
6450, 65 even calls like tomorrow.
so like the way,
Futures.
just like the
This
way.
thing runs with oil futures. You got me excited right now.
That's because I'll give you a little picture of the oil futures right now. I use MCL a lot. So looking at oil futures right here, if you notice, um, we're coming up on a little bit overbought on the stochastics, but if you notice, we place a higher low on the daily right here, right? So it's basically almost like an inverse head and shoulders right here, right? A low, a deeper low, then an equal low than that before that low, and then now you're looking to break the trend, at least go into a neckline, and if that neckline breaks, then boom, ups, all right. But oil futures, I mean,
Yep.
and then you have the 50 MA all the way to 80, 59, so
Yeah.
oil futures have room,
Big old
and
nice little inverted head and shoulders right there.
yeah. So it's going, it's basically, I mean, this thing was on a downtrend of all this. Lower, it's a low, lower high, lower low, lower high, lower low, lower, well, equal high, I would say,
Yeah.
around the 20 MA,
Break
low,
structure,
low.
higher low.
So now it's a higher low, and this is basically this candle today has placed a higher high up to this in reference to this candle. So now it has to, like, to be a complete change of trend, like a very bullish thing. You have to break this high to place another higher high, and then a higher low, and keep going like this, right? But I mean, at least in the immediate short term, where we are traders for the next day or two, we look for opportunities. Then this is what you would like to see, right? That there's room for oil to go up. Therefore, if there's a relation between oil upside and energy stocks upside, then Oxy is gonna go,
Oxy, man.
XOM is
Yeah,
gonna go,
that's the most.
and
Oxy is the most correlated, highest frequency option trader.
yeah.
I'm excited now.
I mean, and look at how DVN closed. I mean, don't if you guys are trading oil energies and anything tomorrow, don't
What do you
forget
mean
to
look
look.
at how GBN closed? I swung. I sent my last trade as 7.
No, I'm just saying. I'm,
7 calls. Let's go.
I'm just saying that there's a whole spectrum of energy names, and you would like to be
Yeah.
on one of the best looking charts out there. Just look at. I'm just going through charts and look at what I just found right now. APA, Apache. What does that tell you right now? The bottom of today is a daily 20, very close to it, not exactly at, but very bullish candle, very solid, very bullish candle, and and closing on top of this consolidation area with a higher low. So DVN is coming into a trend line. That's the only issue, but if that goes to higher and that breaks the trend line, DVN is just gonna go. It's basically you're looking at a mega weekly bull flag, right? With the weekly 20 EMA holding, consolidation happening right here. So it just you will like to think that probably APA has this massive weekly range to go right here. So maybe like
Yeah. Devon's like. I mean, pull the Devon chart back. It's even better, right? Like it's beautiful, beautiful. like snipe on the bottom of that
Yeah.
trend, like one last higher low, like zoom out. Yep. Just tag those three bottoms together. It's a clean line.
So this
Not those
one,
three, the longer term ones.
yeah, this one's right here. Oh no, this one's right here.
Yep.
I'm guessing, yeah, this actually could be like if you notice, like a little bit of a trap right here, and this is what when I call it like this are clear divergences. This is a clear lower low right here, and this is a clear divergence on the other side. So this is a little bit different, when you're trying to snipe bottoms and look for continuation. That this is what you would like to see at least, you know for the stock to be at right here. So that'll give you a little bit of more confluence into a trade, right? So Devon Energy is placing that divergence at the lows, a bullish divergence at the lows. But yeah, I mean, shift through charts on XLE, and you're gonna find them. You're gonna find them. And Oxy, one of my favorites. APA, I think I fell in love with the APA chart, and this will look.
But the options, I don't know.
Options and options on APA are not bad. Look, I don't know if you're looking at my screen, but let's say on the weeklies, the 47.5s are 2 cent wide.
How much volume?
This one has 200. Today had a 215 volume, 88 open
And
interest.
that's one order.
Yeah,
That's
yeah.
like a starter for Cube.
No, I understand, but I mean, I don't. A lot of times, I don't care if there's low volume. If I can, if there's like if I'm gonna go in with, I don't know, 20, 30 contracts or whatever, and the spread is this, the spread is this tight. I'll play it. You know what I mean?
Yeah, I mean it's after our spread. Can we look at Oxy? Since you have that option chain up.
Oh yeah, sure.
Yeah.
So the
I feel they might be going further up, but
you do see a lot of volume and a lot of open interest, but like the 65s are sitting right now. This is what we're looking for, right? Around 20 cents.
What's the highest volume today?
Highest volume is the 64 calls. Those are 3,200, and
I think it should. Okay, so 64.
There was more volume on the puts. 63 puts. There was more volume on the 60 puts. But yeah,
so
I mean,
if we look at open interest today, and then we look at open interest tomorrow morning, we'll know if they sold or bought.
We'll just take a picture right now.
Yeah.
And save it. Save that for tomorrow, and we'll know how it ended.
Beautiful.
So yeah, I think that concludes for. I'll do a little more scouting, and I'm excited for energy, and we'll see if we can snipe some bottoms.
Oh yeah, they're like laddering. What is that? 64, 65. I'll be all over that. No, there's way more on the calls. 100.
Also, I forgot to mention about this one. EMPH on the weekly is holding the weekly 20 MA and basically putting a 2 down, 2 upside reversal. So that'll be on watch for more upside into the next week. Everybody's trying to short this stock, man. Everybody think it's so high, but this thing doesn't stop, and there's no clear indication that it's gonna stop anytime soon.
Yeah, it's going higher.
But that's a weekly setup, so maybe I'll do some spreads on it. Maybe some calendar spread or some diagonal. Yeah, it's probably what I'll do. I'll sell some weeklies by next week's something.
Okay.
All right.
I like this. Exxon, Oxy, heavy watch.
APA, I'll put APA as well in it. Honeywell and Caterpillar as well. Thank you for joining me. Thank you, Prophet, for coming in. Thank you for your time. Thank you, Okami. Thank you for being here. Next time, bring setups, guys. And like I said, so we can keep this section alive. Or if is this trash or cash?
Hey, really quick, can you send a screenshot for the January monthlies on Oxy also?
The monthlies on Oxy?
Yeah, Jan monthlies. Just curious.
Sure. On January monthlies. Here it is.
Yeah.
Boom.
Boom.
Some big open interest on 70s. And actually
70s.
on the 62s as well, which are already in the money. And also but the 62 and a halves, about roughly the same open
Oh.
interest. This looks like a straddle. Yeah. So what?
Or risk reversal.
Yeah. All right.
It would be a beautiful risk reversal, actually.
Probably.
Shit. All right. Appreciate it, man.
See you guys. Have a good rest of your day. Thank you.
All right.
Kubito out.